As expected, the RBNZ did cut the official cash rate today by 25 basis points to 3%. Now, they did talk about inflation. Inflation still is sitting at the high end of that 1 to 3% range, but they are expecting it to moderate back down to around the 2% mark by the middle of next year, which is good news. So I think the softer inflation outlook and the softer economic conditions that we've seen here in the last 6 months, 12 months, 18 months is further reinforcing the confidence that the bank has to cut. So interestingly, it was a split decision. So of the Monetary Policy Committee's 6 members, 2 of them voted for a 50 basis point cut. So that was somewhat of a surprise. And as a result, we have seen some reaction in financial markets. The NZ dollar is down fairly sharply, and so are interest rate swaps so far today. So what does this mean for mortgage owners, mortgage holders? Well, interestingly, just as I was recording this, one of the banks did announce that they were cutting their floating rates by 20 basis points. So they're keeping that 5% for themselves. The fixed rates I wouldn't expect to move too much. If those swap rates continue to hold at that slightly lower level, then we might see a few smaller cuts in fixed rates flowing through over the next week or two. But I wouldn't really hold my breath on that. If you're thinking about refixing it, so if you do have a refix event coming up in the next few weeks or months, I would still be thinking anywhere between 6 months and 2 years. So 6 months if you want to take a bit of a punt that those OCR cuts are going to come forward a little bit, which I think's probably likely after today. If you just want to forget about it for the next 2 years and not have to worry about it, then I think 2 years is actually okay as well, if you can get a good deal. If you're a depositor, so if you have cash in the bank, if you have term deposits, those rates I would expect to start to come down fairly soon as well. So if you do have cash and you expect that, you don't need that cash for the short term, then I would be starting to think more about bond funds or potentially equity investments if you don't need that cash for the long term. Just keep in mind, all of the stuff that I'm talking about here is general advice and sort of information. So it's not related to anyone's specific circumstances. If anyone out there does want to have a specific chat about their situation, their finances, etc., I'd love to have a chat. Drop me a DM.